Hello and welcome to BloombergQuint. My guest today is Varun Sridhar, CEO of Paytm Money. Varun, thank you very much for joining us on BloombergQuint. You started off disruption in online broking with a 10 rupee charge on FNO. What was the rationale for that?
Hey, good evening, and pleasure to be here. Thank you. I think the rationale is very simple. Paytm has always stood for disruption. Paytm has always stood for an outstanding platform that is scalable and that is stable, right? So if you look at all our other businesses, all the way from UPI to QR code, and then if you look at Paytm Money, when we came into mutual funds first time, we bought the ticket size lower and we expanded the market, and that's how we are doing very well on SIP. So similarly, I think our hope and belief and strong conviction is that as long as they give a stable, scalable platform, we will be able to expand the capital market significantly. So our expectation is today there are maybe 15 million active users in India of equity accounts. Of the 15 million, maybe 2 to 3 million are actually active traders. But in our opinion, the 15 million can go up to 100 million and the 2-3 million can go up to 25 million. So when you look at it from our perspective as Paytm, the simple question we asked ourselves is what is the right price for a solid scalable platform, right? And as we looked at it, we said that 10 rupees, which as you correctly mentioned is really, I think for best in class brokers, we are by far ahead in terms of pricing, and we're giving clients that disruption because we sincerely believe at that kind of price point, a lot of customers first will come to us, but also they will experience the platform and realize that it works like wonders, right? And our early access program has given us that success.
Varun, give me a sense of how Paytm Money has been able to get the subscribers as far as capital market is concerned or cash market is concerned. FNO you have started off lately, so and you're getting good traction there. But give me a perspective of what kind of response you're getting from the for the cash market and other segments like mutual fund or SIPs which you began.
Right. No, so it's a very good question. I think very simply put, our aim is to become India's #1 digital wealth management platform, right? So if you look at that, I have 4 business lines under that business. So the first one is mutual funds, where we have about 7 million users. And we are by far, I think, doing very well on the SIP side. And we process over 1 million transactions a month, right? So that's our mutual fund business. Our second business is digital gold, where we have 60 million users plus, and we've transacted about 5,500 kilos of gold. Now, that's an insane amount of digital gold that goes through our systems. And the third business is pension. Pension is relatively small. But when you come to equity broking, if you take the cash business, which we launched about 5 months back, we have over 200,000 people who've opened accounts. And these days, we're processing over 115,000 trades a day, which is from a market perspective, maybe small, but we are in our 5th month of operation. And we're very, very happy with that, because our focus has been great product, right? I think our focus is when you put a trade, you don't have internet downtime. The product is fantastic and fast and easy. And we've done it, delivery is free, intraday is at 10 rupees. As we come into futures and options, what surprised us when we did this early access was we didn't imagine that we would have 100,000 users queuing up to open an account and start trading. So that's been, a fantastic problem for us to solve because we're very happy with that. And as of today, we've opened it for everybody. So that's a bit the sense of numbers.
So tell me, when you say 200,000 in the cash market and 100,000 in FNO, is there an overlap or these are separate accounts which you're talking about?
So there is a definite overlap because the same customer would first start with cash, intraday, and FNO. But it's not 100% overlap because what surprised us for the FNO early access was a lot of customers who are coming in have 2 very different ends of the spectrum. So Spectrum 1 is a very high-end trader who's maybe placing 300 to 500 trades a month, who's obviously attracted by price and has experienced stability on the cash segment. So he knows that the product is solid, right? And that we can scale. So that's the first end, which honestly is a very high-end customer. The second end is we've got a lot of people coming in from tier 2, tier 3, tier 4 towns. But saying, I want to do my first option trade. Paytm is so cool. I did my first payment. I bought my first ticket. I played my first game on Paytm. Now let me come and try Paytm Money for my first mutual fund, which works well. Let me try my first bank nifty. Or let me take my first bet. And I think that's the other extreme. So we're seeing these 2 extremes. Very, very nice, interesting journey. But there's a definite overlap between the cash and the FNO side.
What about the geographical spread of it? Where are you getting your clients from? I saw your release talking about tier 3 and tier 4 cities, but can you give me some more examples of, how receptive is investors in those cities?
Yeah, so I'll give you an example. I think our 40 to 50% is obviously coming from the top 5, 6 cities, right?
Yeah.
So Pune, Bangalore is surprising. Obviously, Bombay, Delhi, everybody says. But for us, what's new amongst the big cities is Pune and Bangalore. You have a
Mm-hmm.
lot of young people coming in. So that's one trend. The
Yeah.
second trend we see is people less than 25. So we actually checked, and less than 25. And I was thinking these customers are not so well trained, or maybe they're just jumping in to check it out, but it's not true. The kind of orders they're placing, the kind of risk management they're doing is fantastic. So
Mm.
that from an urban perspective, I would say top cities, there is obviously Pune, Bangalore is a surprise for us. And the second big surprise is the younger generation. If you
Okay.
go to the tier 3, tier 4, what's really surprising for us is Warangal, Guntur. Those are a few surprises. We got a lot of customers coming in from Indore, from Jamshedpur, from Bhubaneswar.
Mm.
So that kind of cities which you would normally not expect to come into derivative trading,
Mm-hmm.
great to see that. And I'll give you, I take customer service queries myself on Twitter. So I actually talk
Mm.
to 10, 12 customers a day.
Mm.
And one of the
Mm.
funniest things that happened was I got this customer coming in from Jammu Kashmir who said, I'm trying to place orders, but the orders are not going through very well. Can I, I don't understand what's happening. So I said, so there must be
Yeah.
some understanding issue. And we spoke to him and he understood immediately. He said, no, everything is working well.
Okay. No, when we talk about FNO, we also need to look at the risk management, right? Uh, the regulator is very cautious when it comes to FNO. They are open to the cash marketing, but FNO is something which is very risky for a layman who is coming into the market. And now that you have brought down the fees so low, 10 rupees, it's easier than. So can you give me some idea of what kind of risk management you have? How do you, how have you layered and approvals? What kind of approvals are required for the normal customer to, under his trade?
I think that's an excellent question. And I'll maybe combine that with what I call investor education. Or, in India, we get a driving license before we drive. We actually
Yeah,
study before we work, but there is no
yeah,
financial education, right? So people
that's true.
actually learn as they swim along, right? And that's kind of risky, and you're absolutely correct. So what do we do? There are three pillars of what we do. So first, we actually measure on our back end every day how many trades are going through, how much of that is profitable from a customer point of view, how much of that is loss making. If there
Okay.
is a customer who's actually going through multiple loss trades, right, and we see
Mm.
it, and it's an early one, we are actually calling the customer and asking, saying, hey, are you doing this with awareness? Do you know what you're doing? Are you okay or not? So we've just started that pilot because our
Mm.
hope is once we get to 10, 12 million customers, we want to be able
Yeah,
to call everybody.
that's right.
So what we want to do is build it into the product, which is what we call natural risk management or client
Mm.
suitability.
Mm-hmm.
Right. So as of now, we're doing it manually, and we're trying to figure out, because we're very early in the game and we have the ability to do it manually. But the scaled idea of the product is to make sure that risk management is inbuilt. So for
Yeah.
example, you go in, I know you're doing your first option. Can I automatically do some stop loss for you? Like one of the
Mm.
things we recommend, and in our product UI, when you place an order, the stop loss button is very visible. So
Okay.
a lot of customers see, they don't know what is a stop loss, right? It's not so
That's
easy.
right. Mm.
Then they start to learn and they go ahead and do it. So that's pillar A. Pillar B
Mm.
is education. So we launched our masterclass in December. We did a first masterclass for ETF, and very soon we'll do something for derivatives. So there,
Mm.
what we do is for 2 days, 8 hours, we train people saying, hey, this is how you must work. This is how you must do. So both on the education side and on the product side, we're doing initiatives. And fundamentally, I think all financial intermediaries like us, maybe we should shift our focus from what revenues we make to what revenues or what financial goals the client is meeting,
Mm.
which is a very big change, right? So fundamentally, we are trying to do that change because at the end of the day, if I can ensure that my client meets his or her financial goals, right?
Mm.
Like if this is risk
Yeah,
money for him or her, if he's
that's right.
happy losing 5%, that's cool. But if he's not,
Yeah.
we need to manage that. So that's what we're
You
doing.
know, so that brings in the second question: is there a cap on the kind of investment one particular client can make? Have you put a upper cap on that? How many contracts you can buy, or there is as per your means as per his bank balance or his reserve money, he can do whatever he wants.
So today we don't do margin. So naturally, so first to answer to your question, no, we don't put a cap, but there are some natural caps. So first, we don't give leverage. right? So
Okay.
because we are not doing leverage today, anyway, there's a cap naturally because he has to do whatever he can or she can with their capital, right?
Yeah.
So now within that capital, we are not putting any restrictions today because we're not allowed to. But I think
Mm.
as the product evolves, because we are very,
Mm.
very early in the game, but I think what I would love to do is ask a customer saying, hey, can I restrict you from not smoking more than 3 cigarettes a day, for example?
Mm. Yeah.
But I think we'll need to go through a bunch of regulation, work with the regulator and with the customer, because
Mm.
when the market's moving positive, maybe the customer wants to do the fourth trade.
Exactly.
So that's a bit the evolving process of risk management. But yeah, no, as
Mm.
of today, we don't do a hard cutoff, but because we don't
Mm.
do margins, it's
Mm.
automatically kind of much more softer and easier than many other intermediaries out there.
Mm. So just to get an idea of it, you have brought down the prices to such a level, 10 rupees. Uh, what is the kind of break even that you will achieve by putting in such a low price?
Yeah. No, I think from our perspective, you must understand how we are thinking about it, right? So as Paytm, we are honestly not interested in being a equity slash a wealth management platform for the 1% of India, right? So we can either play a 1% or 5% of top of the Indian pyramid, or we could say, hey, can we come in and expand the market to 25% using technology, using the reach that Paytm already has? So as far as Paytm Money's business plan is concerned, our cost of acquisition is close to zero. So
Okay.
Paytm has millions of users. Those
Yeah.
millions of users do hundreds and thousands of transactions every day. They see the brand. So from my perspective, the cost of acquisition for a Paytm user is close to zero. That's one
Okay.
important. So we don't spend on advertising, right?
Okay.
Anything that you see on LinkedIn, Twitter is normally very organic for us.
Yeah.
So my cost of acquisition is lower. The second big thing is our product. So the way we've designed a product is a DIY scalable product. So if you look at our team, 80% of my team is actually technical. We don't
Okay.
have a sales team. We don't push clients saying, hey, do you want to open an account? Why don't you trade today? We don't push a customer to trade.
Mm. Mm.
If you look at traditional brokerages, there's a call saying, hey, you should buy this, you should buy that.
Mm. Mm. Mm.
We don't do that because we think that's wrong, right?
Mm.
Because, to give an advice, the regulators come out with a very nice RIA model, right? And I think we've decided on the equity brokerage side not to do that as a
Mm.
choice. Because we think we are a platform. And as a platform, our job is to give great tech, which is scalable.
Mm.
So we
Okay.
are preparing for 10 million clients, which no single broker in India has. And
Okay.
therefore, that technology allows me to bring my cost up. So between
Mm.
cost of acquisition, my ability to bring technology in and bring cost of transaction down, we think at 10 rupees, it's the fair price to the customer. Like, why
Okay.
should I accrue more profits on my side when I don't need to?
So you think even at 10 rupees will be profitable? That's what you say?
Absolutely.
Okay. And what happens if tomorrow someone else comes and disrupts you? You
I think
have the Zerodhas and the Upstocks of the world who have who have an early start and they have reduced the prices so much, and now you have come and disrupted them. So they, of course, they will come back and disrupt you again, right?
I think Paytm Money first Indian market is huge, right? If you just look at it, I think till we get to 100 million people active on capital markets, we are far away. So
Yeah.
first, I think there's space for everyone. Second, I have a lot of regard for my competition because I think they've done a fantastic job in their own spaces. But if you look at what Paytm Money is trying to build out, we are very clear that we will be India's first digital DIY wealth management platform. So if you look at a product list already, we are by far ahead, right? So you can
Yeah.
do mutual funds, ETFs, IPOs. You can do obviously FNO. You can do digital gold. Very soon you'll be able to do at least 10 odd new products, right? So this year for us, we are launching product after product. I think to
Okay.
find the convenience
Mm.
at a price point at which we are in is not so easy for a lot of competition to build out from a product perspective. Now
Okay.
you combine that with a Paytm wrapper where another 50 products and services exist, is just making it super simple for a client.
Mm.
So that whole super app story allows us to retain our clients, and that's how we've been growing. In
Mm.
2 years, we are India's number one mutual fund distributor. We've not done any advertising just by being honest to the customer. So
Mm.
I'm honestly not worried, and I don't think the game is on price. I think the game in
Okay.
India is about making sure you expand the market. The second step is making sure that you give a stable, simple platform. And till you experience the platform, you won't realize that.
One of the advantages that mainstream brokers have is that they provide allied free services, such for consultancy, or their own dealers talking to them. Uh, when it comes to Paytm, you're basically following a do-it-yourself way. But do you plan to bring in those allied services as well as a value add to your customers?
So the choice we are making is as follows, right? I think value-added services are a part of wealth management because as a customer grows, right, a 25-year-old will become 40, his or her needs are going to change drastically, right? Now,
Yeah.
during the journey, there are moments where the customer is taking a step up. Now, during that step up, how can we help? For example, there are PMS products, there are debt
Hmm.
products, there is algo trading, there's a bunch of other things outside.
Yeah. Yeah.
Now, our plan is to become a platform. So what we intend doing is to open up our APIs and become a marketplace. I think what we are good at. So in India, we manage, Sajid, 20 million merchants, right? It's our
Hmm.
strength. We are India's largest merchant or business partner for small businesses as Paytm. So that's
Hmm.
naturally in our DNA to manage all those intermediaries, but not in the financial services side, right? Today, they are managed
Yeah.
in the QR code side. So that
Yeah.
DNA exists. What we plan to do is to become a open API kind of platform where let's say you are an algo trader. So you are somebody
Hmm.
who writes great algos and you have your clients on your side in a technology platform. But what you need is a great backend at the right price, which is very,
Hmm.
very reliable.
Hmm.
And if you're able to do that in a platform basis, which means me plus that startup get together, what that startup needs is ability to market and to go scale and to manage regulation. They can't do that right today because it's just tough.
Yeah.
So we are
Yeah.
able to do that. And if they can join on an open API into our system, that allows them to bring in the innovation. So what
Hmm.
essentially I'm trying to create is we will manufacture some parts inside and then we'll build out an open ecosystem and hopefully in the next 12, 18 months that will be ready with a bunch of
Hmm.
players. So from a customer point of
Hmm.
view, whatever he needs to manage his or her money, he should find it in one place. So he doesn't have to
Hmm.
go and hunt in different places. And I think if we start doing that, the need of a physical intervention with time will go down.
Okay.
We obviously understand there are some customers who always want to talk to somebody.
Hmm.
But I think we are consciously saying that's not our strength. Our strength lies in technology. Our strength
Hmm.
lies in building things at scale and making an ecosystem. So
Hmm.
that's the
So,
plan.
Varun, the issue is that for the last many years, the market regulator has been trying to expand the market. Even though we have, if you look at the DMAT, we have nearly 6 crore DMAT accounts. Uh, the UCC shows us that it's just 1.6 crore which is active. So how do you, even if you expand it through various financial services or products, we haven't seen so much of means activity coming to active clients coming to the stock market as such. How do you do that? Well, that's the biggest challenge for you as well, right? Scale,
Absolutely.
getting the scale.
Absolutely. I'm fully with you. I think there are three challenges and therefore three solutions. Challenge A is what we've done in mutual funds is to make it simple. It sounds very nice to say this, but it's so tough to do, right? I'll give you one
Mm-hmm.
number which will satisfy that we've got one mutual fund SIP customer, at least from 99% of all PIN codes in India, right? Which is not bad, which is a fantastic number.
Okay.
50% of all our customers in mutual fund are first time to market. They've never seen a capital market transaction before, right? So we take the burden of
Mm.
not only bringing these guys, but explaining to them same day NAV, right? It's so complex.
Yeah.
But that first step, we are doing a fantastic job in mutual funds. Now, that's one proof that we are able to expand because purely of physical reach of the mobile app, right? We are present in every corner of India in a bigger way than anybody else. So that's step pillar A, which we are solving, I think, by our distribution. Problem two is customer life cycle. Why do people stop trading after a year? The industry activity ratio is about 23%. So actually 77% of people don't trade after 1 year. The question to ask is
Mm.
why. Most probably, I call them wounded tigers because they come to the markets, they have a hope, they want to actively manage their money, but at the end, they're software engineers, architects, journalists, people like you and me who work. So, you're having a
Yeah.
meeting with your boss, the stock price is dropping, you should sell, but you're not there, right? By the time the meeting is finished, you missed what a full-time trader would have done, exited or
Mm-hmm.
just profit. Now, the trick there is to automate all of that or to tell a customer that, hey, don't do all this, please do ETFs. So look at
Yeah.
ETFs. In December, as Paytm Money, we said the next 10 years in India will belong to ETF, not to direct equity and not to mutual fund, right? Why? Because if you're doing mutual fund, your expense ratio in direct mutual fund is 1% and in regular is 2%, right? Because of the commission.
Yeah.
But
Yeah.
if you do same ETFs, it's 0.05% and a 0.13% tracking error. So from a customer perspective, that's the right product to sell. Why does nobody sell it? Because you don't make enough money, right?
Mm.
As an intermediary. But we've taken the onus of saying ETF is right for a customer.
Mm.
So my revenue there is zero, because when you do an ETF delivery, I don't make any money.
Yeah.
But why do we do it? Because we think that if I do the right thing, and I'll quote a statistic for you, we launched our ETF business in December. Between December and now in Feb, 18% of all of Paytm Money's customers have bought at least one ETF. I feel so happy about that, because 1/5 of my small customer base, we are only 6 months in our business. If they've purchased an ETF, I can assure you that's bigger than any other wealth management platform in India,
Mm.
right? And I think that's the change. The second pillar is we need to learn how to do the right thing. And I think third pillar is education. As long as we don't teach a user that you have to learn first, we will not succeed. So,
Mm.
and it's a journey to make. I think, we are in this for the next 20, 30 years, as many years as it needs to be done. But Paytm has shown before that we could convert the whole of India from cash to mobile payments. I think we will have this journey done successfully here. It's a question of maybe 3, 4 more years.
So Varun, finally, which are the other products which are in the offering?
Uh,
Something currency and commodities.
no, so we are thinking. I'll tell you the long list of stuff that I'm thinking about without revealing my product
Yeah.
roadmap. It's a
Yeah.
very competitive world, but we are thinking currency. Obviously, it's because you said it. We are thinking debt. We are thinking an all-out expansion on ETFs. We're thinking about international equity, and we are thinking about how to get a 25-year-old and lesser kind of investor,
Mm.
something very specific, special for him or her, because they
Mm.
think differently.
Yeah.
They're not thinking like you and me, right? I've lost hair, so I think
Give me some insights into that, because that's a new investor, and I just want to understand what the thinking of that new investor is.
also the thinking of the new investor is very, first they like to experience. It is not an investor who would like to read and experience later. It's experience first and understand along the way. So what you notice is this investor first is much sharper than the older one, which means that they compare. So they are doing much more research online saying, hey, so let's take an example that I tell you, buy a ETF for Nifty, which is a Nippon Bees Nifty ETF, which is a simple
Mm.
product. Now, what the guy is going to do, what I find very surprising, a young guy, a young girl from a college, they actually go and measure how Nifty is moving versus ETFs in an Excel sheet in the first 3 hours, 4 hours of trading. Okay, so they've already done that work. Now, if you imagine, that's so far ahead in terms of ability to understand, because I think these people are born digital. They understand all this very quickly. They go to different sites, they download, they put it on an Excel. It's easy to get this today. The minute they do that, they figure that, hey, this is how I must trade. So what we see surprisingly is they're able to put intraday or square off orders as their first few orders, because they figured out that, hey, this moves like this. As long as I'm in Nifty, this makes sense. An index fund doesn't make sense, right?
Mm.
That for me, at my time, honestly, would have taken 3, 4 years to do. What I just told you is a very normal 25-year-old customer from urban India understanding and doing that very fast. Second is their expectation from a platform is that all the information will be available in one place, much cleaner, faster, and what's not needed should not be there. So we often internally discuss saying, hey, this is a Tinder, Zomato, Swiggy, Uber generation. Their expectation is they will press a button and they'll know when the food is going to come. So our expectation as a product is to make sure that they understand when their order is going to get executed or not, right?
Okay.
So making that whole journey like Amazon, like Flipkart, like Zomato, like Tinder is going to be the tough part for a financial platform, because that's their expectation. They say, hey, why are you not like Zomato, Varun? And I'm like, okay, I'm not Zomato. I have a regulator behind me. So, yeah, but that's your problem, not ours.
Mm.
So I think that's how they're a bit different. That's very exciting part of India to cater to.
Okay, Varun. got a lot of insight from you with respect to the new investor who are entering the Indian market. Thank you very much for joining us on BloombergQuint today, and
Thank
have a
you.
great luck with the new product.
Thank you. Thank you. Thanks a lot.
Thank you very much.
Thank you.